Alright, welcome everybody. Welcome back to the Know It Alls channel. I'm going to do a quick video. Alright, well this market is pretty crappy, right? Choppy, sideways, no volume, not much going on. How can you pump out some higher yields, right? That's all we want, right? We just want bigger yields in these markets. So what can you do? Alright, well, I'm going to show you. Say you're looking at this, right? And you're like, man, this market has been sideways for a month. You know, how can I get aggressive here without putting myself at too much risk, right? Well, first of all, you need clear levels of invalidation, because that invalidation will allow you to take on a small amount of loss, lock in a small amount of an impermanent loss in case you're wrong, right? Or if the market doesn't go your way, right? Well, not really impermanent loss. It allows you just to invalidate that idea and get back to the original plan, right? So, say here you're looking at this market. You're looking at Ethereum versus USDC, and you want to tighten up your ranges, right? Now, I have it already set up here. Say your current range is 1,600 to 4,000, right? And you're generating a 16.26% APR, and you're like, man, is there something I can do to pump out a little bit more yield while I wait, right? While I wait for volatility to come back, because we all want to make volatility great again. So what you want to do here is you want to first identify, okay, if I start farming very tightly here, what is a good level of invalidation to the upside and the downside? For instance, let's take this last pivot level up here of around 2,600. We could say, okay, at 2,600, if it gets above there, we will revert back to our original range. And anything below 2,400, we will also revert back to our original range. So we can stay super tight in range here, generate yields until one of these two things happen, right? All right, so say you're farming, right now you're in a 1,600 to 4,000 range LP. It's at a 50-50 ratio, right? You can see it right up here, 50-50. You're like, okay, how tight can I get it? Well, I already did it for you. You could get as tight as you want, right? And still stay 50-50. But here's one scenario. You went from 1,600 to 4,000 down to 2,120, 3,002, and that still maintains a 50-50 ratio. Now you're probably thinking, well, Float Locker, I don't want to take on impermanent loss in case the market rips. And that's exactly why you have those levels of invalidation. Say at 2,600, above 2,600, you want to revert back to a wider range. Now I'm saying, you know, just going back to a wider range and using these ratios, you know, as you can see, it's 50-50. This one's 50-50. You're getting tighter. So you're doing no rebalancing, which means you're not taking on slippage, no price impact, right? So you're saving money. That's very important. You take on, say you do a rebalance, you know, you're taking, let's say you rebalance 10K worth of a liquidity pool at a 0.5% of slippage, right? That's $50. That totally makes this strategy not viable, simply because this type of strategy, to expect Ethereum to stay in this range for a long period of time is not really reasonable. You know, you'll probably rebalance or rearrange within the next day at a very tight range like that, right? If it breaks out of 2,600 or below 2,400, you will probably have to rearrange in the next day or two, right? So it's prudent that you don't do any rebalancing. All right, so we're here and we're like, okay, cool. Now we're in this tight range of 50-50 at 2,120 to 3,000. Cool. We boosted our yields from 16% up to over 40%. Now imagine you do this daily, right? And have that plan set up daily to boost those yields, right? Now you could print a 40% APR on a daily basis while also keeping impermanent loss low or even eliminated. You probably won't even take on much impermanent loss. Now the key here is to use Aperture Finance. You want to use Aperture Finance because what you can do is you can plan out those invalidation levels. You don't have to sit in front of the desk and wait for 2,600 or 2,400 to hit. You just set up your new ranges when it hits those levels, right? And you set it up in Aperture using the automated rebalance. Now, what happens if price gets above 2,600, right? I'm not going to do the $2,400 range or below, but you'll get the idea when I show you above 2,600, okay? So what is the value of the pool, or what is the ratio of the pool when we get to 2,600? Right now it's 50-50. We're in this tight range. All right, invalidated at 2,600. Now the ratio of our pool is almost 41% to 59%. 41% ETH in the pool now, because you've been selling it on the way up and you're selling it at a faster rate, and now you're at 2,600. Okay, so when that happens, you want Aperture to rearrange your liquidity pool and now maintain this 41-59% ratio and get super wide. And then that way, when you have time, you could come to the desk, set up your new plan to get super tight, rinse and repeat. So, okay, well, price is up here, great. Now you also have to think of impermanent loss, but I'm not going to go all into that, right? You have to understand like where you staked originally. You have to set up your liquidity pools to make sure you're not taking on impermanent loss as well, right? So it's very important. That would be the key factor in how you structure your liquidity pools. But I'm not going to go into that here because it'll be a long video. So here you go. You're at 2,600, 41%, 59%. I already got it set up over here in this next tab. Here you go, 41%, pretty close, 41% to almost 59%. Very small rebalance, right? So you're not taking on much slippage, not much price impact, not paying too much, not losing too much money out of your pocket, right? You know, I'm all about keeping as much money in your pocket as possible because we're in DeFi. Liquidity's fragmented. You just don't want to lose money, man. That's all I'm saying, man. I'm just here to keep more money in your pocket. You know, not many people talk about that in this space. It's very important to realize that and to identify that and limit your slippage, your price impact. You keep rebalancing and rearranging, rebalancing, using all these automated tools, you're going to lose all your money in due time. I guarantee it, because you're losing every time to slippage, man. You can't stop it. Liquidity is too fragmented. Now, there are ways to avoid slippage, and I teach that in the Know It Owls. You know, if you want to learn more, click the link in my description below. You can book a strategy call with us, and, you know, if you like, you could join up and learn all these strategies. You know, I go in detail. I go in depth how to avoid slippage, how to rebalance without taking on slippage. You know, how to minimize or even eliminate or even get into an impermanent gain instead of impermanent loss. Impermanent gain, that is the holy grail of providing liquidity. But anyways, I digress. So here we are, 41% to 59%. Cool, 2,600, great. What is the new range? This is the new range, 1,500 to 3,800. So essentially your tight range before it got invalidated at 2,600 was 2,120 to 3,000. Now you're back into a wider range. 1,500 to 3,800, maintaining that ratio so you're not swapping anything and not losing money to the rebalance slippage gods, right? So here you go. That's it. That is how, and then you rinse and repeat, and you use Aperture to manage this, right? And if you don't understand what I'm saying here, you really want to learn, you know, get in contact with us. Click the description below, book a call with us. We can talk with you. If you really are interested and want to join their community, you can learn a lot from there, right? So we got a few coaches in there. We're all talking about concentrated liquidity, how to run strategies, how to minimize impermanent loss, how to make sure to optimize our liquidity pools to maximize our gains, all right? So that's it, man. That's it. If you understand this, great. That's great. But if you don't, you know, there is more to it, right? But here in a nutshell, you can run a very tight strategy while keeping impermanent loss low and generating some high yields. All right. So that's going to do it for me. Hopefully you enjoyed the video. Till next time. See ya. Peace.